Hello, welcome to our first European Open briefing for 2018. Today is Monday, January the 8th, and I'm Rafi Barjan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. The US dollar is a little bit firmer this week after having a rather poor start to the year. It does remain range-bound, though. There wasn't significant impact from Friday's US jobs report, which came in slightly worse than expected, as it didn't change the outlook for US interest rates in 2018. Stocks continue to rally. Asian stocks are close to their all-time highs. Wall Street last week already closed at another record. Earnings season starts this week, so all eyes will be on how much further that will fuel the current rally in equities. The euro and pound have lost some ground against the US dollar on Monday following strong gains towards the end of 2017 and early 2018. The Canadian dollar is doing rather well this morning. It hit a 3.5-month high on Friday after a very strong jobs report out of Canada. And in commodities, oil prices are steady. They're being supported by a drop in the US oil rig count. Let's start first with what's happening with the US dollar. We can see dollar yen here in orange has been steadily climbing since the start of the year. It's currently trading around 113.30. Though if we look at the dollar index, we can see it lacks any direction. It's been hovering around 90, the 92 level for the past week. Friday's jobs report disappointed as the US economy added just 148,000 jobs versus expectations of 190,000, though we did see a small pickup in average earnings, which rose by 0.3% month on month, though the expectations remain that the Fed will continue to raise rates at a gradual rate. This was reinforced by a couple of Fed policymakers speaking over the weekend. We had San Francisco Fed President John Williams saying that he expects the Fed to raise rates 3 times in 2018. Cleveland Fed President Loretta Mester was a little bit more hawkish. She wants interest rates to rise by 4 times this year. The focus now will be on Friday's inflation and retail sales numbers out of the US, which might give the dollar some much needed direction. If you look at what's happening in equities, we can see all major indices are in green. The Dow Jones rose by another 0.9% on Friday. The S&P hit another record at 2,743. European stocks are all up this morning except for the FTSE, which is rather mixed. Though if you look at Asia, they're also all up today. Tokyo was closed this morning for a holiday, but we can see all other indices are pretty much doing well. We can see Australia's index it's currently trading near 10-year highs at around 6,236. Earnings season starts this week. They're expected to come in very strong. That could fuel equities even higher, and that trend is expected to continue for the rest of the year as the US tax cuts boosts US corporate earnings further. If we move on now to European currencies, we can see the euro is down this morning. It slipped just below the 1.20 level to the lowest in 1.5 weeks. We can see last week it rose to very near September's 2.5-year high of 1.2092. It stopped just shy of that level at 1.2089. So there's clearly a strong resistance area around 1.2090. The euro is being boosted by expectation that the ECB will end its QE when the current program expires in September. Several policymakers in recent weeks have sort of been hinting that if the Eurozone economy continues to grow at current rates, the ECB is unlikely to renew its asset purchase program program beyond September 2018. We've got business survey data coming up later out of the Eurozone. The Economic Sentiment Index will be published later. And in Germany, Angela Merkel has started formal coalition talks with the SPD party. It is looking like they will be able to reach some sort of a deal to form another grand coalition. Though, of course, some risks remain. Markets are overall optimistic that there will be a deal which would secure Merkel to stay in power for another term following the elections last September, where she failed to win a majority. If we move on to the UK pound now, we can see sterling climbed just above the 1.36 level, close to September's high. Didn't match that high. It stopped just below that level before retreating lower. It has since recovered a little bit, currently trading around 1.3540. Though if you look at the broader trend since the end of December, we can see the pound has been steadily climbing against the US dollar. What happens next will depend greatly on how much progress will be made in the Brexit negotiations. It is hoped that by the end of March, the UK will be able to come to an agreement on at least the transition deal. But we could see some volatility later today, as the UK Prime Minister Theresa May is expected to announce a reshuffle of her cabinet following the sacking of the first Secretary of State Damien Green in December. Last week's UK PMI data were mixed. The services PMI came in the strongest. And that did boost sterling on Friday, but for now the pound remains has started the week on slightly weak note. If we move on to oil prices, we can see oil prices are trading fairly close to last week's 2.5-year highs. This is WTI here trading around $61.50 a barrel. Tensions with Iran are supporting prices higher, and also on Friday we saw the active US oil rig count dropping again, so that also helped prices higher. But overall, US production is rising, and that is offsetting some of the cuts being made by OPEC and some non-OPEC countries. So further gains will likely be limited if the current outlook holds. The Canadian dollar isn't seeing too much of a strong correlation with oil prices lately. We can see on Friday that big drop in USD CAD. The loonie surged to a 3.5 months high of 1.2351 to the greenback because of a big jump in new jobs being created in Canada. 78.6k jobs were added in December versus expectations of just 1,000. The unemployment rate as a result dropped from 6% to 5.7%. That's a pretty big drop in 1 month, and so that has fueled expectations that the Bank of Canada could raise rates as early as January 17. That's next Wednesday, when it holds its first monetary policy meeting of the year. Moving on to today's economic calendar, we've got the Eurozone Sentix Index and the Economic Sentiment Index, but there's not going to be much data out of the US. But we will have a couple of Fed speakers: Atlanta Fed President Raphael Bostic and San Francisco Fed President John Williams. He will be speaking again later. That's it from me. Thank you very much for watching, and have a great day.